As the curtains draw on the 51st Economic Commission for Africa and the Conference of Ministers, two conversations are some that we'd like to highlight for today's special. Number one is capacity building, and number two, who exactly was behind some of the mechanisms designed for trade. Now, a word or phrase that has been mentioned is the centrality of capacity building. We will be getting a sense on it and unpacking what that means from two perspectives. And we speak to the former president of the African Development Bank, Donald Kaberuka, to guide us on the next step for growth. Welcome to this CNBC Africa special.
What the texts say is that once the 22 countries have deposited the instruments of ratification, 6 months later, the treaty enters into force. So we now have a few countries who have done so. I do expect that in the next 6 months, there will be many more countries joining in, and then the treaty will be into force. But in between now and then, there are additional schedules to be negotiated on things like dispute resolution, rules of origin, safeguards, a schedule of goods, the list of services to be involved, and so on. A number of technical schedules which must be done. But I think now we are on takeoff. I'm quite confident that by the end of this year, the CFTA will be in place.
We'd like to know whether you have any quick wins or medium-term wins we should see when you're trying to renegotiate our contracts with the external population.
You know, one of the challenges some countries said they faced with the formula we proposed for financing was that without a free trade area among ourselves or a customs union, that would go against some of the clauses of WTO. I'm not sure that was the case, but this is what they said. And so one of the huge advantages of the CFTA is that now every single country in Africa can apply the mechanism proposed to finance the African Union without violating any international treaty.
What are your views on an African currency?
I think that should be the destination. But on the way to it, there are many preconditions. What has been done on the CFTA is one of them. We'll have to go through a customs union. We'll have to come to an economic union and monetary union. We'll have to look out at harmonization of policies. So we can reach a single currency at some point, but in between there are things which can be done, especially on the payment systems and the clearing houses, which can lower transaction costs of transacting in different currencies before coming to the currency union. A currency union, as you could see from the Eurozone experience, would also require a few other things to be in place, including a fiscal union, maybe a banking union. It will require a high level of solidarity. It will require someone to be able to look at the rules of convergence. So we'll get there one day, but it will be quite a long journey.
Right, that was the former president of the African Development Bank. Now, moving on, there is one phrase that we have not heard in previous conversations: centrality of capacity development and capacity building. We got to hear on this in regards to whether the issue on capacity is a resource-intensive department or one that just needs some strategic readjustment.
If you look at the history of development in Africa, from the Lagos Plan of Action to the Abuja Treaty, to the poverty reduction strategies, the Millennium Development Goals, establishment of NEPAD, APRM, you name it. You can agree with me that the performance of all these initiatives, if they had been at the expected level, we will not still be talking about Africa's development as we are speaking about it today. So you have to ask the question, why is it that with all those fantastic initiatives and strategies, we have still not been able to achieve the sort of development results that we expect? And some people will tell you maybe it's lack of political will. Others will tell you lack of financial resources and all kinds of things that they will bring in. But we have done a very careful analysis as a capacity building foundation, which demonstrated to us that the missing link is capacity. That we have ignored capacity to our own peril. And it used to be very popular in the 70s and 80s after the structural adjustment programs, but suddenly it went out of vogue. But for us, we believe that capacity development is not something that comes and goes out of fashion. It's a fundamental issue. If you don't address it, you would have fantastic plans, but they will not be implemented.
Originally, we were talking about brain drain when we try to maintain talent on the continent, but now it's brain transfer where we're seeing skills being moved across different parts of the continent. Now, this is an issue in itself and an opportunity in itself, but what is your read?
In the case of Africa, the challenge there is what sort of capacity are you losing? Who is leaving? And at what pace are you replacing those who are leaving? I'll give you a very good example. If Malawi is investing so much in training doctors, and almost all of them are in Manchester, but if you go and look at the doctor, population ratio in Malawi, it's not something that is satisfactory at all. So in that case, yes, these doctors remit money to their relatives in Malawi, but if we do the overall analysis, especially the social impact, is that it seems to me that we have to be a bit careful in that. But having said that, if a massive number of people, just like Korea did, Japan did, Korea did, China did, and everybody did, even India is doing it as we speak today, that they actually have a structure for, benefiting from their diaspora, either through returnees or through capitalizing on their intellectual and financial capital, have a strategy for doing that, then it becomes useful. And so for African countries, this is something that they have to pay attention to, because the African diaspora, whether you narrowly define it or you define it to include African Americans, is quite a huge, resource and capital that can be, benefited from.
When you go through such a thing, there is always an adjustment cost. Tariffs were originally being used perhaps to support budgets and all that. Now, when you create a common trade area, it means that what happens is that you're going to you have to drop your tariffs all the way to zero. And so, therefore, in the initial case, you're going to take a hit if you are dependent on those tariffs for budget support or for development efforts and all that. Now, I think this must be seen short-term, intermediate, immediate, and the long-term. I would agree with you that, or everyone would agree that the long-term is beneficial. Short and in between, when you're going through the adjustment cost, what other countries have done, and yes, you're right that the smaller countries might take a bigger hit because they are the ones who perhaps depend more on these tariffs for support. So I think the AU should think about having some form of a compensation fund. Now, we have to think through that. And having a compensation fund means that countries that are going to lose some revenues, you help them a little bit as they go through the transition of an adjusting to the new reality, so that they are able to manage on the adjustment. I think COMESA did that, and COMESA does have that fund. It's very helpful and beneficial, but there are complementary issues that you have to tackle. What do we do about the question of currency? Because you're going to be faced with exchange rate risk, and most of our countries, our currencies are not convertible. So we all go through, perhaps even you coming here, George, I'm sure that if I look into your wallet, you have $1. You don't have the Rwanda money. So the question then is that these kind of issues we need to tackle. What kind of payment systems are we going to have? COMESA has a payment system, but Africa, most of our exports or trade, we have to wire it outside the continent and then bring it back. And I'll give you an example. One time I went to, for work, I was in Cairo, and we're talking to the ministry of, one of the ministries, and Egypt is a member of COMESA. And they were saying, the question is that, yes, we would like to trade more, but what kind of payment systems do we have? And so I think that kudos to our leaders. I mean, don't get me wrong. It's a great thing that we have the CFTA. But I think in terms of implementation, we should begin to look at these things. Like the question you asked, the loss of revenue, if it's going up to 20%, it's large. But the one important point when it comes to regional integration issues, when it comes to AU matters, do you know what the AU does? This is an important point. You're doing trade for who? For the people. But the people don't know you. Right, so you have to find a way also to be able to sell the AU, and linked to this is the financing. Who is going to pay for this implementation? How are we going to do it? I talked about the compensation fund. who is going to pay for it? And so all these things is linked to the sustainability of the financing of the union, which we did in Kigali 2 years ago. Kigali is getting a lot of praise for what you do. You did the financing, you now did the trade. But it's the question is that this is why Africans, we need to buy into it and begin to contribute our own and to become sustainable. Otherwise, all these things means nothing if you're going to have this and then turn around and go to another country, the Europe, and say, please help me finance it. No, we are capable. And people relate this to the question of the illicit financial flows, where we have currency, money leaving the country because of poor contracts and all that. I mean, it's been cited, Tabu Mbeke's report cites 50 million or billion leaving the country. These are loss of revenues to put up a good school somewhere in a neighborhood. You know, so we need to think holistically. That's what I'm trying to say here.
Today's episode finalizes our coverage here in Addis Ababa in Ethiopia on the 51st session of the Economic Commission for Africa and of course the Conference of Ministers. And over the last couple of days we've mapped out different topics trying to highlight where exactly the challenges or opportunities are. We've touched on inter-African trade moving from the current 16% to 52% by 2022, touched on the countries that have already deposited their instruments into ratification of the AfCFTA, that is Kenya and Ghana, with Rwanda and Niger set to follow suit. And we've also mapped out what are the conversations happening in renegotiating our contracts on the African continent. Now, this seemed like a handful, but you could always refer to most of them on www.cnbcafrica.com. And for the rest, if you'd like to engage or indulge, our Twitter handle is @CNBC Africa or mine @George Ndurango. Thank you very much for staying with us right here on CNBC Africa, first in business worldwide.